What are segregated funds? Are they worth it? Segregated funds, part investment, part insurance. They promise guarantees, protection, and peace of mind. But are they worth the higher fees? And who are they really for? Today, we're going to break down what segregated funds are, how they work, and whether they deserve a place in your portfolio. Welcome to the channel. My name is Anthony Gismondi. I'm a senior wealth advisor with Aegis Wealth Management, a part of Wellington Altus Private Wealth. The goal of this channel is to educate Canadians on the complexities of personal finance and provide clarity to help you reach your goals. If you're new here, please subscribe and click the like button. What are segregated funds? Segregated funds are investment products offered by insurance companies. They're like mutual funds in that they pool money from investors and invest in a diversified portfolio of stocks, bonds, or other assets. But here's the key difference. Segregated funds come with insurance guarantees on your principal and on your estate. They're governed by insurance legislation, not securities law, and they're backed by the insurer's balance sheet. Segregated funds versus mutual funds. Let's compare. Investment risk, fully market-based plus guarantees. So let's talk about the death benefit guarantee. Some offer a 75 or 100% guarantee. Maturity guarantee, usually after 10 years. Creditor protection is available in many provinces. Bypassing probate if you have a named beneficiary. Fees, usually they're lower, but segregated funds are usually higher, between 2 and 4% or higher. Key features of segregated funds. What are the higher fees actually for? Guaranteed savings protection. The seg funds offer maturity guarantees, which ensures a minimum amount of your investment principal is protected if its market value falls below the guaranteed amount on the contract's maturity date, typically at 75% or 100% of your original investment after 10 years. If markets crash, your principal is protected. How about the death benefit guarantee? If you pass away, your beneficiaries receive at least 75 to 100% of your original investment, even if markets are down. How about creditor protection? In many provinces, segregated funds held in non-registered accounts may be protected from creditors, especially if a family member is named as the beneficiary. This is a major benefit for business owners. Let's talk about privacy and probate bypassing. Seg funds allow you to name beneficiaries directly on the contract. This means no probate, no public disclosure, and a faster, simpler estate settlement. Estate protection. For clients with non-resident beneficiaries or complex estates, seg funds can simplify wealth transfer and reduce executor liability. Tax reporting simplicity. In non-registered accounts, the insurer tracks your adjusted cost base and reports capital gains or losses on a T3 slip, reducing your amount of paperwork. Resets and locking in gains. Some segregated funds offer automatic resets, locking in market gains and increasing your guaranteed death benefit over time. How about the underlying investment options? Segregated funds don't invest in insurance. They invest in real portfolios, similar to traditional mutual funds. These can include Canadian equity, global equity, fixed income, balanced funds, dividend strategies, even option-based strategies like covered calls. Let's discuss the taxation in non-registered accounts. Segregated funds are generally best held in non-registered accounts. Why? Because you get bypassing of probate, you may get creditor protection, you benefit from simplified tax reporting, you preserve privacy. You see, in registered accounts as in RSPs, RIFs, or TFSAs, these benefits are mostly redundant. Registered accounts already bypass probate, and growth is already tax-deferred or tax-free. The higher fees of segregated funds may not be justified here. Let's talk about the cost of segregated funds. The fees. Seg funds are expensive. Management expense ratios, or MERs, can be up to 4% because you're paying for insurance guarantees, estate planning features, administrative simplicity. But over a 20-year period, those fees can seriously erode your returns, especially when you compare that to passive ETFs or dividend-focused mutual funds. Let's discuss the pros and cons. Are the higher fees a trade-off you're willing to make? Here's some pros. The death benefit guarantees allow you to take on more risk, knowing your principal is protected. Creditor protection is valuable for business owners. Probate bypass simplifies estate settlement for non-registered assets. Privacy, no public disclosure of your estate. Executor relief, especially helpful for families with non-resident beneficiaries. What are some of the cons? High fees. They can eat away at long-term returns. Maturity guarantees may not be meaningful over long time horizons. There's better alternatives for long-term growth. For example, passive ETFs can outperform due to lower costs. So what and who are seg funds good for? Segregated funds aren't for everyone, but they can be a good fit for retirees who are risk averse and want estate protection, business owners who want creditor protection with a portion of the investable money, families with specific estate planning goals like naming individual beneficiaries and bypassing probate. My perspective as an advisor. In our practice, I believe segregated funds can play a role in your overall investment and estate planning strategy. But I caution against using them as your entire portfolio, especially if you're under 60 or have a long-term investment horizon. For younger investors, the high fees will seriously erode your returns over time. For older investors who are very risk averse and have specific estate planning objectives, segregated funds can be a valuable tool, but they should be used strategically and only for a portion of your investable assets. Segregated funds offer protection, simplicity, and peace of mind, but at a cost. If you're considering segregated funds, make sure they align with your goals, your timeline, and your risk tolerance. If you found this video helpful, give it a like, subscribe to the channel, and drop a comment if you have questions about segregated funds or estate planning. Thanks for watching, and I'll see you in the next video.